What's up, people? Let's see. Turn this on, share. Um, let's see, what day, 22. All right, good morning, guys. Today is Thursday, June 22nd, and as usual, we'll be going over analysis for US 30, gold, and EU. Let me first turn off this zones here for now. Turn off the zones for US 30 to make the chart a bit clear. So, this morning, even in other groups that I used to be part of, I saw a lot of people trying to catch buys on US 30. So nowadays, all I do, right, I talked about drawing the trend line on the hourly. So this is the trend line I drew on the hourly, right? And you can see this trend line is a major point of where price is sticking to it. So what I expect for US 30, I'm not really looking to trade US 30. I do expect US 30 to keep going down. However, I do not have any sell entries for US 30, but this is my expectation. I expect US 30 to retest this trend line that has been retested time and time again, and around 33,760 area. So if I look at the markup indicator, guess what I see around that zone? We have a 4-hour bullish high, 4-hour bullish low, daily bullish high around that zone. And guess what I see as well? Let's see here. Let me do this one. So if I turn on the zones indicator, so I already know we have a 4-hour bullish high here. We have a previous weekly low as well here. 4-hour bullish high, 4-hour bullish low. If I turn on the zones indicator, if I'm going to take a buy around these two high time frame buy order blocks, I want to see buyers sitting here. So when I turn on our zones indicator, guess what I see? All I see are buyers that are sitting down here. So if I know that I expect US 30 to go up from here, if we didn't have like 4-hour bullish high and low, if we didn't have the daily bullish high and low zone here or markups here, this trade, the probability for this trade, I would only be using the buyers here, and I would also be using the trend line on the hourly. So I would have like a 80% probability for that trade hitting. But now that I have a 4-hour bullish high and low here, and I have a daily bullish high here, what I expect them to bring price down here. So we still have buyers here, like especially here where price is rejecting from, we have a demand zone within a demand zone. But for price to keep going up, they're more than likely going to bring price around 33,755 area, 33,740. And what happens when price gets here? They wick it down, right? So like what we've been learning, and this came from Steven, we might have like, what is it called? Accumulation, manipulation, so they can fake people out, so stop out the people or smart people like us who anticipate the buy from around 33,760, and then guess what? Bring price all the way back up. When price closes above this 4-hour bullish high and daily bullish high, price will literally spike to the upside and take off all that liquidity to the upside. So for me, I'm not looking to buy US 30 now. I am waiting for US 30 to get to 33,760 area, 33,750, which lines up with this high time frame order blocks, also lines up with this trend line on the hourly that I have. So right now, in any case, I would be looking to take sales for US 30. Unfortunately, I do not have any sell entry for US 30 right now, other than this 15-minute bearish high and bearish low. Not to say that US 30 cannot just go up straight from here, but I'm not, right? I always look for trades that, nowadays I'm looking for trades that have high probability. So hopefully we get that buy for US 30 during the live session. Gold, I'm expecting gold to, so I did mention, so this is the pattern, right, that I'd sent the other day in the Discord, the head and shoulders. And gold, literally, because I had this anticipation right here, for gold to come here, if you remember when I sent it in the group. And gold literally completed that pattern to the downside, creating this left shoulder, head, right shoulder, and gold dropped all the way to the bottom. Now, this trend line on gold has been sticking. So this is why I talked about gold coming to around 1901, 1905 area, because one thing I know about static trend lines is price almost always retest those trend lines. Now, on the 1 hour time frame, we have two static trend lines. We have this major one right here, which I expected gold to retest the 1901 area, 1890 area. I'm not, that's why we were in a buy on gold the other day based on the reversal strategy, and we got stopped out. And actually, let me see, because we got stopped out on the 5-minute. I would be curious to see if there was a buy on the 15-minute. But anyway, so right now on gold, we have two static trend lines. We have this one that if price does come down and retest it, will be around 1890 area at this point. But we also have this other static trend line that has been created recently. So on this static trend line, it's still the 1905 area. So my buy on gold will be around 1905, 1900 area. But knowing the manipulation that's going to take place, they might break this trend line and come to 1890 area. So if I do buy gold at 1900, my stop loss will probably be 1880 and 1870 area. And I'll go for like 300 pips TP and stop loss, and maybe write that trade for like a couple of days into next week. So that's my analysis on gold. I really haven't traded EU recently, but what I can tell you about EU, the way I'm trading even the hourly timeframes going forward, this was a sell on EU. I can automatically see a sell. This hourly candle was a sell on EU. And nowadays I go for like a 40 pip TP, 40 pip stop loss. And with my trades, you can easily go for half the stop loss I normally give and leave the TP remaining. And that way you get a easy 1:2, because most of my trades have like a no drawdown, or most of my trades go back to like 50% of the stop loss before dropping. The reason this was a sell on EU, what pattern am I looking at here? I'm looking for EU on the hourly has been trending above the 9 EMA for, what is this, 10 hours or so. Okay, so for me, the way I normally trade breaks and retests. So here, what I would have been looking for is closure below the hourly trend line, retest of the closure below the 9 EMA on the hourly, which we did get on this candle, retest of the 9 EMA and closure below. So this is why I'm saying this would have been the sell on EU if I was trading it. But nowadays, I just look for one trade a day. Unfortunately, I did not see this trade on EU. Also, look at what else do we have on EU? We have an hourly bearish high, hourly bearish low. So to me, when I see this, the hourly bearish high and low, it overrides the 15-minute bearish high. I mean, that's fine having another bearish zone. But for me, this hourly bearish high and low overrides the 30-minute bullish high, overrides the 15-minute bullish high and low. So at that point, let's see, the hourly bearish high and low was around 1.099. So 1.099, which was somewhere around here. So you could have even gotten an earlier entry right here, because the way we trade this bearish highs and lows, same thing, wait for a closure below and then retest and closure below. So this was another entry right here on EU, right here. This was another perfect entry on EU right there. So this one, right, for me nowadays on FX pairs that move similar to EU, I'd go for 40 pips TP, 40 pips stop loss, right? If I normally before I used to go for 20 pips TP, 20 pips stop loss if you want to hit TP quicker. But for me nowadays, right? So there's so many entries, and I haven't even turned on the zones indicator. So if I turn on the zones indicator, guess what we have? We have sellers sitting here. So this is how you use the zones indicator together with the markups indicator. So for me, I never use the zones indicator by itself. When the zones indicator, like if I identify a buy or a sell, what I want the zones indicator to tell me. So for example, if I'm looking for example, the US 30 buy that I'm anticipating down here at 33,760. And which lines up with this order blocks. What I'm looking for, if I'm looking to buy here, when I turn on the zones indicator, I want to see buyers sitting here. I don't want to see sellers sitting here. So if I turn on, for example, the zones indicator on US30, all I can see is buyers sitting down here. So that's how I use the zones indicator. I never use the zones indicator just to blindly buy or sell. In any case, the zones indicator is the very last indicator that I will turn on before taking a trade, if that makes sense. So for US30, looking for that buy right here. Gold, I'm looking to buy again at 1905. No sooner than that. I'm not going to hop in any case right now. If I were to buy gold, I would use like a 500 pip TP and stop loss if I really wanted to see a trade on my MT4. But I'm not going to hop into a trade just because I don't want to get left off. So EU is maybe the only trade we can. So if we get a retest of 1.099 area or this hourly bearish low, around 1.09887, maybe I can take the sell there, and that's a sell that I can take with a 20 pip target actually. So if gold comes, I'm sorry, EU comes back up here, that's the sell. That's the only re-entry I can enter on EU. So 200 pips stop loss, 200 pips TP. So I'll turn off the zones indicator because I already know we have sellers up there. So this is the only trade I can retake. Also, what do we have on EU? 5 minute. We have a death cross on the 5 minute. So yeah, like we just have so many entries. Also, I'm still in this GJ sell. Like, see, I came so close to hitting TP twice, but I'm still holding on to this GJ sell. But in future, if I ever take another sell like this, so this is why you have to keep learning. In future, if I ever take another sell on GJ, instead of using, this time I use 200 pips TP and stop loss. So next time I'll just use 150 pips TP and stop loss. I was actually about to enter another sell using 150 pips TP and stop loss because I could have easily hit TP for that one. So that's why you have to keep testing. So what may work for me may not work for everybody. And for me, for this trade, I'm in with like a 2% risk. So if this trade hits for me, I'll be up 2% on a 200K account, or I'll make 2% from this trade. But I'm still holding the GJ trade. So one thing I'm interested, does anybody have any questions? So right now we are just waiting for US30 to do its thing. So if it doesn't, then that's fine. I'm not hopping in any buys earlier. If it doesn't, then that's fine. Gold, if gold decides to go up from here, that's fine as well. But I know my target buy area on gold is 19. Also look at gold. We have a 4-hour bearish high and low. This was another sell on gold. Unfortunately, I didn't look at it this morning. So we have a 4-hour bearish high at around 1934, 4-hour bearish low at 1929. So this 4-hour order block overrides this hourly bullish order block. So for me, what I'm seeing just here, just indirectly, I'm just seeing the 4-hour bearish high. So if I really want to take off anything that's telling me to buy, I can easily come up here and turn off the hourly order blocks. And then I'm just left with the 4-hour. But for me, I'm able to subconsciously just delete from my mind the zones that are not pertinent to me. So for me here, yeah, if I had seen the 4-hour bearish low here, guess what I would have waited for? I would have waited for closure for the first time gold closed below the 4-hour bearish low, which is around 1930, what was it, 1930 area right here, right? So this is the sell I would have taken on gold. Closure below, retest and closure below. So this is the sell I would have taken here on gold. And for gold, I normally go for, what is that? 100 pips TP and 100 pips stop loss nowadays. So that's the trade I would have taken on gold. And it would have barely hit TP. So I'm not going to chase this trade because you can see it literally almost hit TP by a pip or half a pip or even quarter of a pip. So I'm not going to re-enter this trade because it already went. But that's how I could have taken that trade based off of the 4-hour bearish low order block that's right here. You wait for a break and retest of it, you enter. For me, right, that's 100 pip ride. If you normally do 50 pips, you could have hit TP like so quickly. So yeah, but I'm not gonna chase this sell on gold. I'm just gonna wait for the drop. So hopefully that makes sense. There's just so many ways to win with what we have. I want to see that. So we got stopped out on the reversal on gold. Give me 1 second. Let me see something. Because normally, so this is the sell we got, I'm sorry, this buy we got stopped out on gold right here. Because I turned off the, so here if I turn on the buy, on the 5-minute, this is the buy we got stopped out for on gold the other day, and we lost 1%. But the beauty of it, the same day we took one trade on the live session with US 30, and we won that trade with a 0.5%. So for Wednesday, what month are we in? For June, for just that day, we won 0.5% and we lost 1% on gold. So that just brings us to, and yesterday we didn't trade. That just brings us to minus 0.5% for Tuesday. So that's the importance of just having proper risk management. So for this one, so what I would have done here, since we got stopped out on the 5-minute, I would have then gone to the 15-minute time frame and waited for a reversal entry buy on gold. So this is the one we got stopped out. So the other buy would have been here on the 15-minute, right here. This candle 15-minute, and even for this one would have gotten stopped out even on the 15-minute. Then guess what I would have done? Gone to the 30-minute. So on the 30-minute, let's see, we don't have any buys on the 30-minute. So here what I would do, based on the reversal, since we got stopped out on the 5-minute, I didn't enter any buy on the 15-minute, but that's what I would have done because I've been busy yesterday and the day before. But I would have taken also the buy on the 15-minute and gotten stopped out. So right now, what I would be waiting for also on gold, you can see on the 30-minute, we haven't had a buy since we got stopped out on the 5-minute and 15-minute. So if we do get that buy on the 30-minute, that's another trade you can enter. Based on the reversal. And for that one, since for 5-minute, we got stopped at 1%. On the 15-minute, I would have taken a 1% risk. So technically, if you got stopped out on the 5-minute and 15-minute, you'd be down like 2%. On the 30-minute, I would go with a 2% risk. So if we do get this trade on gold, based on the reversal indicator, I'll be entering it with a 2% risk. So hopefully we get it around 1905 area, which is my target area on gold. And even at that point, if we do get it at 1905, 1900 area, instead of a 2% risk, maybe I'll even go with a 3% risk and use, so this one is 100 pips, TP 100 pips stop loss. Maybe in that case, I'll use a 200 pips stop and 200 pip take profit. So I'll be watching gold on the 30-minute using the reversal indicator. And for this one, since this is a higher time frame, 50-50, yeah, I'll just leave it that way. The breakout scanner, this is my favorite. I'm sorry, the crosses indicator. Let's see, US 30, it's ranging a little bit. The crosses indicator, this is the indicator with a 90 to 98% win rate. You can see one full TP on the sell. If you're using 100 pips or whatever TP and stop loss, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 886. So about 15 trades back to back would have hit full TP. If you use 0.5% risk for each one, guess what? You'd be up 7.5%, and you only need 8% to hit to finish phase one of any challenge. So this is my favorite indicator. So guess what I'm looking at? So right now, as much as I see, but I told you guys, if you're gonna take trades, let me see those requirements. If you're gonna take trades based off of this indicator, these are the requirements for it. In order to have a better or highly probable win, use the crosses indicator on the 15-minute time frame for better results. Use on fast moving instruments, US 30, NAS, and gold, and maybe Bitcoin. Check for the golden cross. So the crosses, the original crosses will have a cross next to it. So trade the golden and death crosses. The secondary crosses are these other entries that do not have an X on it. So that's why I call them secondary crosses. And also first 3 to 4 trades, including original cross, are highly probable. So in this case, right here, I turned off the buys because I don't want to be confused by any buys, because right here, I was waiting for that sell on US 30. So guess what, for me, I would have done? Came in here, short position, somewhere, where is this? Short position, right? I'm guessing somewhere there. And then US 30, full TP on the first one. Same thing, right? The key thing is to trust the trade. Don't, right? If you start questioning, you might mess up your win rate. 2. The third one somewhere above there, US 30. 3. Right. And for me, for these trades, I probably would have gone in with a 1% risk. Now, the other issue, you don't want to pile up like, so for here, if you went in with a bunch of 1% risks in here, if these trades did hit stop loss, the only downside is that you could have been down maybe 4%. So maybe you want to do 0.5% for these trades. And then you come in here, the other sell as well, somewhere around here. Full TP right there. So you could have had 4 back-to-back wins. If you went in with a 0.5 risk, guess what? You'd have been up 2% on your challenge. And at that point, you know what you could have done? Now you could have been waiting for a buy. So I'll be looking for the buy on US 30 based off of the golden cross. So right here, I already turned off the buys. So right now, maybe I can turn on the buys right here and just rinse and repeat it. The other way, you can use the golden crosses indicator in tandem with the breakout scanner. So breakout scanner is my second favorite indicator that we have. It also has, for this one, I would say has like a 80% win rate, at least 70 to 80% win rate, which is pretty high. The key thing, you want to take the first, so right here, so these buys were valid buys because we had a bunch of sells previously, but these buys, of course, would have hit stop loss. So if these buys would have hit stop loss for me, I would have gone heavier lot size on these sells that came in here. Because if you have 2 trades, and I don't know what time they came in, so again, look for trades between 11 p.m. Eastern Standard Time and 2 p.m. Eastern Standard Time. Don't try to enter any trades 2 p.m. to 11 p.m. Eastern Standard Time because you're bound to get faked out. So I don't know what time these entries came. I'm guessing they came around 3 p.m. or 4 p.m. yesterday. So it's not even trades that I would be looking to take. So you want to take trades that come somewhere towards the end of Asia session or London session, because that's when trends normally start. Because what the breakout does for you, it shows you when a trend is starting or when price is breaking out. So these were good sells to take on US 30. So you can put this one in. So if you're getting sells for US 30 around end of Asia or London session, and you're also getting sells using the breakout scanner, and you know that this one has, crosses indicator, you know that the crosses indicator has like a 90% win rate, 90 to 98% win rate, and you're also getting a sell based off of this breakout scanner that has like a 80% win rate. So if both of them are showing you that direction and you come in here and you have the markups indicator, you turn it on and you see that the area you're getting sells for has sellers, just go ahead and take the trade. 1% risk that trade and you're up 1% easily for that particular day. So yeah, so that's how I trade nowadays. I just trust my indicators and that's it. Yeah, so I'm not sure. So this US 30 trade might come up later on in the day, unless the only way I'll take a buy on US 30, because remember, as much as static trend lines need to be retested, it doesn't happen 100% of the times. So right now, what I'm watching for US 30, for me to take a buy on US 30, is if we get a buy here. And this is on the 15-minute time frame. So if we get a buy here based off of the crosses indicator, that's the only time I'll take a buy on US 30. But until then, I'll just wait for US 30 to come to my area of expectation down here. Any questions from anyone?
You're broken off the question.
Mm-hmm.
Yeah, so the reversal scanner.
Mhm.
The inputs for the breakout pips. Did you put 150? Because I was testing it.
No.
When I
So
did,
so
yeah,
there's two kinds of inputs. There's this input. So this input right here in the reversal one, gold US 30, gold US 30 NAS and maybe Bitcoin 50. That's the default 50
yeah,
max.
mm,
So there's two kinds of settings. There's the settings inside the reversal indicator and the settings outside that you manually mark up. So this settings outside where you have an area of interest, those are manual settings. They're not related to the scanner in any way. These are just settings or inputs you mark up on your chart so as to show you if you get a buy or a sell, whatever you're looking for inside this threshold,
oh yeah, yeah,
you do not take it. So those are independent of what's in here. So for the reversal scanner, for the reversal indicator, US 30 NAS and Bitcoin or whatever instruments that move like that, this should be 50. FX pairs, this should be 20.
Okay, so in the reversal, I saw I put in the breakout pips, I put 150. Now I put 50 first, and the
Mhm,
breakout EMA has 9. And
mhm.
then when you put 50 pips as the breakout pips and you put 9 EMA, you get a lot more signals. But the
Yeah.
problem is some of them are fake outs. Like when you said the head and shoulders
Mhm,
pattern,
mhm.
there were when the right shoulder formed, there were two buy signals that came. But
But
I think they were
why would you be looking for a buy if it's a head and shoulder pattern?
yeah, but that's what I was trying to say. The reversal scanner I think uh, was given was basically showing those two signals. But then when you said the head and shoulder pattern, then I realized to get out. Um, but then if you put 150 pips as the breakout pips, if you change it to 150, like inside the indicator,
Mhm.
it wouldn't have given you the signals.
Yeah, I mean,
Yeah.
you're right, but
Mm,
so here's a question. Why would you take that? My first question is why would you look to buy in a head and shoulder pattern? You would only look to sell. So that's why I have
yeah,
the options here to change. So that's why, like, if I'm looking for a buy, I'm going to come in here and turn off the sells because the sells are going to start messing with my mind or messing with
oh yeah,
my psychology. So
yeah,
you shouldn't even be looking for a buy on a head and shoulder pattern unless it's an inverse head and shoulders, which
mm,
normally means price would go up most of the times. So okay, so there's that one part. You shouldn't have been looking for buys.
yeah,
Secondly, what helps you avoid fake outs is this is why I have this manual way to draw the chart. You
yeah,
identify your area of interest, you identify on gold 150 pips, so that if you get any buy within this threshold,
mm,
you do not take it. So that's another way to identify that. If you put 150 right here, I mean, not to say you can't put it, but you're
mm,
going to miss even the valid settings because this will take off everything, almost everything. Now, if you find a way that 150 works for you in here, not to say that it doesn't work, maybe there's a way it works, but I haven't back tested with 150. For me, I've just back tested with 50. And that's why any settings that I gave you guys for the indicators, those are not the holy grail settings. It's just
yeah,
the default settings that you should build upon. So if 150 works for you and you find a strategy that has a 90% win rate with 150 here, go ahead and use it. Don't use 50. But for me, any demo that I'll ever give for
yeah.
right now will always have 50 here for gold and 50 for US 30 because that's what works for me and that's what gives me a high win rate.
Yeah, so the default for the reversal is 50, the breakup bit, right?
Yes, for
The
US
the
30,
yeah.
for US 30 gold and NAS, that's it.
Mm, okay. Another thing is the head and shoulder pattern.
Mhm.
What I've really, I think I did some back testing on it, but what I saw is I don't know. I think you realized as well that usually when you look at the left and when you look from the top, it usually like drops for 400 pips plus. I don't know. I don't know if you've seen, but
So
it
I
happened.
mean
Yeah.
for me, right, I don't look at pippage. I
Mm,
don't count how many pips is gonna drop. For me, like here, gold, right? So that head and
mm,
shoulders. All I know about a head and shoulders is just the basic, right? Just keeping it simple. Left shoulder right here. So gold went up this much, created a left shoulder right there, went back up, created a right shoulder. what I was expecting here is a left shoulder, which means I was expecting a lower high to be created. I don't care about pippage. Okay, what do I know about a left shoulder? More times than not, it's gonna come, and this is structure. So I'm good at identifying structure. What I know about structure is price will almost always come and complete structure. It doesn't have to complete structure to the pip, but more times than not, that's why my arrow was facing right here. My arrow didn't go all the way down here. So that's what I care about. I don't care about the pips. And then I look for my entry. My TP on gold is 100 pips. I just look for a sell right there, and then I enter my trade. Now, if you want to write the whole amount for 400, however, so the drop here was probably what, 50 to 24. So the drop here was 250 pips. So for me, I was right. For me, my target to make 1% for this trade or 2% was only 10 pips. I'm sorry, 100 pips. So I don't care if gold would have dropped 1,000 pips. I made my 1%. That's it. I move on. I look for the next trade. So for me, I don't look at how many. That's just my own style of trading because I have fixed TP and fixed stop loss.
Yeah, so what's it called? Yeah, so if we look at what was it called on when was it? Yeah, on Thursday, 1:30, not 1:30. Sorry, when the unemployment claims came. So when you use the crosses, the high-low trend and the breakout scanner together, if you get all together, you see this the signal came. So the reversal scanner gave the reversal indicator gave the first signal like maybe half an hour before all of the other indicators. And then, so would you use the reversal with the halo and the crosses?
So personally, for me, I only use the reversal scanner when I identify a trend. I don't use the reversal scanner when trading news or anything. Only time for me, and again, that's just me. I don't use the reversal scanner on a daily basis. I only use I know, like for example, US 30, for my threshold to be met, US 30, I'm gonna get a reversal maybe twice a month during heavy news, before heavy news, or after heavy news. Or maybe I'm trading gold and I see gold trend on the 5 minute on the 5 minute, and I see trend for like 150 pips, then and only then. But I'm not gonna use and trust me, there's your right. You can use the reversal scanner on a day-to-day basis, because if I turn on the buys and sells, but I just have not got to that yet. So that's what I'm saying. Like for me, those are just my default ones. Not just right. It's not the holy grail. It doesn't mean you can't use the reversal scanner on your daily trading. You definitely can. But for me, I haven't back tested it to show me how I can use it that way.
Yeah.
So there's definitely ways to do it, but for me, I just haven't back tested to find a way for the reversal scanner to be used, for me to use it on a day-to-day. Because on the other hand, I have the crosses, I have the breakout scanner. You don't want to get to a point where you're using all of the indicators and 3 of them are giving you buys, 1 of them is giving you a sell. You don't want to get analysis paralysis. So you want to dial down on how do you use it, right? And that's it, right? Like you can, for me, the only thing I can advise you of is how to use it during before heavy news and after heavy news. That's it. I can't advise you on how to use the breakout scanner day to day, because I don't, to be honest with you, I don't know. It's definitely there, but I haven't put in time to backtest that, if you know what I mean. Now, the other way, maybe you can use it. Okay, so let me show you. You see how when we had that head and shoulder pattern, so gold was around here, 1956 area. So so one way, so let's start with the breakout scanner. With the breakout scanner, I come in here. This is how I would have traded using, if I really wanted to use all of the indicators to give me a confirmation that gold is going down. So I would have come in here. Here's gold, and I look for the breakout, for the inverse, I'm sorry, for the head and shoulder pattern. So I can see this is the head and shoulder pattern somewhere here. Okay, so looks like the left shoulder is somewhere down here. This is the left shoulder right here. The head, the right shoulder is somewhere here around 1958. And I know this is on the 15-minute time frame, but you can still see the structure. Okay, so if I know this is the right shoulder here, guess what? I would have looked for a sell on the break right here. So this is the sell I would have taken on gold, maybe somewhere around 1950 area, based on the breakout scanner. Okay, that's one. I come to the crosses indicator right here, gold. because I'm seeing a pattern. So I'm looking for confirmation on all of my indicators. So
Yeah.
we would have gotten a sell on the breakout scanner around 1950 area. Okay, so let's use the crosses indicator and see if we could have gotten a sell. So this is the same thing. Here's the left shoulder right here, the head
Yeah.
somewhere here, the right shoulder somewhere around this is the 15-minute, so maybe somewhere around 1958 area, same thing. So then look for a sell, which I took right here around 1950 area, because even the breakout scanner gave us around 1950. Yep,
Yeah.
1950. So two of my indicators have confirmed a sell. Okay, reversal. It's not a reversal. So here's the other thing to consider as well. The reversal indicator, and this is on the 15-minute. The reversal indicator, as much as it's a reversal indicator, remember that a reversal is also a breakout at some point, right? Because a reversal is also a breakout or start of a new trend. So if I came here on the reversal indicator that day and I was looking for sells, so here I'll turn off the buys so that they don't confuse me. Turn off the buys there. This is on the 15-minute. Okay, what do we see? We see the left shoulder right here. We see the head right here. We see this is the right shoulder right here, and we get a sell. So this one would have given us an earlier sell at around 1954, but eventually would have given us a sell at 1950 area. So I have one, two. So this is one way to use the reversal indicator, not to catch a reversal, but to catch possibly the start of a new trend towards your price target. You see what I mean? So that's how you can backtest it and see
Oh
how can
yeah.
I use the reversal indicator to as a confluence in my direction. So you could have gotten 1, 2, 3 indicators telling you to sell. What's the other indicators we have? The markups indicator. You come here on gold. This is on the 5-minute. So let me go on the 15-minute so that we see well, so this is the trend we are looking for. Left shoulder, head, right shoulder. So what we are looking for here, so we don't have, at that point, I mean, these order blocks, of course, have changed. So we can't really back test what order blocks we had on gold up there. I think we had a 4-hour bearish. But if I turn on the zones indicator, and also this one, we can't really back test because we really don't know if there were sellers up there at that point. I might have to go to a higher time frame because it might uh it's too many candles, so that's why it's not showing. Anyway,
Mm.
so you had what, 1, 2, 3 indicators that were telling you this head and shoulder pattern is likely to complete at that point, right? Even now, if for me I used all 3, guess what, maybe not even 1%, maybe I would have taken a 2% risk for that trade, because you have 3, all of the indicators we have telling you to sell or telling you price is most likely to sell. So yeah,
Yeah.
so that's how you can use that.
So the head and shoulder pattern usually tends to complete structure, right?
Yes, it doesn't have to
Yeah.
complete to the, so what you want, the other thing you want on any structure itself, you want to take either the sell or the buy at the 30th, the upper or lower third. So head and shoulder, we expected head and shoulder to come down. So you want to take a sell, and this is why I was talking about 1950 or 1954 area being the best area to take that sell, because you don't want to start chasing sells down here when the pattern has already been completed. You want to catch the upper third. So if you want to divide the head and shoulders into 3, upper third, middle third, and bottom third, you want to, and even though it was the reverse, same thing. So always divide structure into maybe 4 times or 3 times, whatever. And then you want to take either the buy or the sell on the upper, or if you're taking a sell, you want to take the sell on the upper third or upper quarter of that structure. If you're taking a buy, you want to take the buy ideally on the lower third or lower quarter. So
Mm.
you don't, for the sell here, you shouldn't have been taking the sell on the bottom third, because gold would have easily completed that structure and reversed all the way back up and stopped you out. So you always
Yeah.
want to do your probabilities while taking that trade and see how far can this go away from me.
Mm. Yeah. So when you took the reversal the other day on the 5 minute, on the 3, would you look for reversals on the 5 minute? Because on the 5 minute, sometimes I think, of
Yeah.
course, we got
So it's not. So just to cut you short there, it's not
Mm.
always some for me, I always will start a reversal on the 5 minute. For me, I don't care about getting stopped out of a trade. I really don't care because my risk management is good. You will never see if you
Mm.
start say maybe what that's when you can get analysis paralysis. For me, I get in that trade, I don't care about taking a loss because I'm not over leveraging, if that makes
Yeah.
sense.
Mm.
Now, for me, I will always start any, my bad. For me, I will always start any and every reversal on the 5 minute. If I get stopped out on the 5 minute, guess what? I go on the 15 minute, which is what I just showed on gold. On the 15 minute on gold
Yeah.
as well, I would have gotten stopped out. And that's why right now I'm waiting for the reversal on the 30 minute. We might get that trade for US 30. So I'll turn off the sales on US 30 for now. If we get a buy here on US 30, I will be taking that buy.
Mm.
Yeah. Now that's how for me, that's how it works. Not to say that you shouldn't start looking for the reversals on the 15 minute. Now the thing with here's why I take them on the 5 minute. In any given day, all of these indicators will give me at least, or let me not say at least, on any given day, all of these indicators will give me 3 to 5 trades that have like a 80 or at the very least 70% probability averaged out. So like with the reversal one, is it the reversal? If you go, the higher the time frame you go, the lower the trades you get, if that
Yeah.
makes sense.
That's
So I
true.
really don't want to be waiting for a trade for 2 days or for 8 hours. So that's why
Mm.
for me, I'll always take, and so long as you put that threshold, where's that reversal? So long as you put this threshold, you will avoid fake outs. This area of interest, this threshold, even if you take it on the, hey, you can even take a reversal on the 1 minute and expand this threshold. So long as you have this threshold, it will help you avoid any fake outs. This right
Yeah.
here, the buy on the 15 minute, this was a very valid buy because we got the buy down here. If I turn off the sells, this is the buy we took right here.
Yeah.
It was somewhere down here because this one I changed to fast moving average. It was down here. This was a valid buy because gold had trended down from my area of interest for more than 150 pips before it gave me the buy. So
Mm.
that's all I needed to know. That aligned to my strategy. So that's why you see every chart I have this, the trade requirements. So it met step one. Step one, step two, three, and four. And also, when I looked at all the other indicators, it was showing a buy. So I never doubted this trade on gold. And also I know I don't have 100% win rate. So even though I got stopped out, I don't care. Like I just keep moving to the next time frame. I didn't take the 15-minute one because I wasn't in front of the charts. But if I took the 15-minute one, guess what? I would have also gotten stopped out. And that's fine. I don't have a losing, I don't have 100% win rate. So that's why right now
Mm.
on gold, I'm just waiting on the 30-minute. And then once I get this, I just jump in the trade again and let what happens happen.
That's not the thing. What's it called? With the reversal, usually, like when you do get the uh, signal, I think I know. Of course, the losses you have to speak it part the take up part trading. But when you're 40 to 50 pips in the in profit, would you just say to suggest that break even? I know you just say
No,
hit
I,
stop
I
loss.
used to I used to do that, but I don't anymore. So here's the thing. So
Mm.
what will matter when you exit a trade? Do you know? Okay, let me ask you like right now, do you have a risk to reward for your trades? Do you normally have a risk to reward?
Mm, most of the time, yeah. No,
Okay, well, here's the thing. You need 100% of the times. So you can't control your win rate, but you can control your having a TP, having a stop loss. You can
yeah,
control having. So for me, if I gave you like a statement of all my trades, I always have a TP and stop loss. And that's what gives you a risk to
yeah,
reward. So here's what I'll tell you. It doesn't matter whether it's 50% or where you set break even at. What I'll tell you, make sure at the very least you have what I have here, 1:1.
yeah.
So what that means, so for example, right here, if I win one trade, right? If I'm risking 1%, guess what? I'm up 1%.
Yeah.
Okay. If I lose this trade, such a setup, I lose 1%, correct?
Mm.
Okay. What happens if I take this trade, it's a valid trade. At 50%, I take off maybe half, or I close in full profit, right? I'm up maybe 0.5%. Let's say I close the whole trade in full, I'm up maybe 0.5%. Okay. Let's say then the next trade I take it, and the trade just gives me a little bit of profit and starts going back into drawdown. Will allow majority of the traders, what will they do? Will they close early? Will they close a loss early?
Yeah, yeah. No,
They
let's see.
will,
No, they wouldn't. They wouldn't. No, they'll let it
right?
ride.
They'll hold. So most of the
I,
traders hold losers more than winners. So
yeah,
if they hold that loss, guess what? Guess how many more winning trades like this you need. So if you won 0.5% and
yeah,
lost 1%, guess what? You need, so you would be down like 0.5%, 0.5%.
yeah,
Now, if you win the next trade, you would be up 0.5%. Okay, but again, what would you do when you're up another 50% and you close, right? Maybe you'd be down,
yeah.
you'd be up in, or you'd be at break even. The logic is always have a 1:1. At the very least, have a 1:1.
Yeah,
So when at least you've made back, and again, for my trades, you can easily have a 1:2 risk to reward, because my trades rarely go into stop loss, or worst case,
yeah,
they go like 50%. So you can, for me, I can easily have a 1:2. So for 1:2, so if you want to be to secure some at 50% using the trade setups that I have,
yeah,
use 50% of the stop loss I give, so that if you're 50% in profit for my trades, you're already at a 1:1. Do you see what I mean?
yeah.
So you
I see.
never want to have a negative risk to reward ratio, which is what closing winners early and letting losers ride will give you. It will, you can have a 1:1, but if you close winners early and then you hold on to losers, your risk to reward will automatically be negative. It doesn't matter whether you have a 1:1 setup when you're taking the trade. If you close winners early and hold on to losers longer, you will always have a negative risk to reward. So my advice to you is, based on your stop loss, so at the very least, like for me, if
Yeah,
I really wanted to keep my 1:1, and I just do this subconsciously, like
yeah,
I would at the very least set break even when I have my 1:1. I would then start, if I wanted to start trailing and didn't want to take my full profit here, I would start trailing at 1:1, not before, not after. So that's why you can see for this GJ trade, I'm still in the GJ reversal trade,
oh yeah,
because it did not, and mind you, I'm in this trade with a big lot size, or big risk, right? Because I trust this trade. Now, I did see the error of this trade. I should have used 150, but
yeah.
now here's the other part of exiting. If you want to exit a trade early, here's the other thing you can do. Were we on what was this gold? Here's the other thing you can do. Now, if GJ right now, I can go to GJ and then see if a trade starts reversing on me and it's starting to go to drawdown. Let's say it's a sell. God, let me see. I want to explain this. Okay, let's assume we took a buy here on gold. Let's just assume that we
Mm,
took a buy here on gold using 100 pips TP or just whatever this is. Let's assume we took a buy here on gold, and let's say the trade was valid. We did not FOMO in this trade whatsoever. And then let's say somewhere down here, and this is just assuming, let's say we have a 4-hour bearish low here. We have a 4-hour order block or 1-hour order block here. Now, if I see that this trade started coming against me this much, and then we have a bearish order block here, what do we know about bearish order blocks? More than likely, price will hit them, and our trade might go straight into stop loss. So this is the only time then you can say my trade setup is invalidated, because you can expect this and then boom, you hit your stop loss, right? So you can tell yourself, if I get a 5-minute closure and retest below this area that I know that price might reverse from and or might keep going to my stop loss, I'm going to cut this trade. So it doesn't mean that every time you should let your TP and stop loss hit. No. Sometimes your trade, as much as it might be valid, price might get to a certain point and your trade is invalidated. So then and only then should you exit a trade early. But if your trade is setup is valid and you don't see anything to invalidate your trade before TP or before stop loss, just as of yet, let your TP hit and let your stop loss hit, if that makes
Mm,
sense.
yeah.
Yeah.
With the static trend line that you have at 19, oh, is it 1905, 1900? Uh,
Mhm.
yeah. When did you draw that? Was it like last year? Oh,
No. So this one, I drew it. So you can automatically see here gold was trending to the downside. So what do you
right.
do? So trend line should always come from static trend line always comes from one established point of structure. So from this high low. So I saw one, two, all of this. So I drew this one. So this one
Uh,
here, this is where we caught that huge buy last week because I expected gold to retest this. This is why, right? I'm in no rush to buy gold because I can see I've been burnt, like honestly with you guys. I've blown accounts, even while being funded and while being consistent because of I saw the trend line, but my dumb self just said, no. I want to be in a trade. Let me buy. No. So I identified this trend line last week and then I waited for price to retest it. And then guess what? We had like a 4 hour or something bullish order block down here. And then that's when I sent that gold trade and we went straight into TP. So for this one, I drew last week. For this one today, I just saw this one automatically. Gold is still trending to the downside. So I took together this lower low to this lower low and this lower low. And also, like, you'll know when you're drawing a good trend line. For a good trend line, you don't want to let the trend line cross candles. So I wouldn't draw a trend line this way. Let the trend line cross candles after you've drawn it, if that makes sense. So while
okay.
drawing a trend line, let me give you an example. For this US 30 trend line, guess what? It is just now crossing candles. So yesterday I drew this trend line from this higher high to this lower low. By then price had not came to this area. So it's not like I've just right now drawn this trend line from this higher high to this lower low. No. Yesterday I drew this trend line when price was here, price was here. So this is when I drawn this trend line. So as of yesterday, this trend line wasn't crossing any price, but as of today, look at what happens. Because it's a static trend line, price is sticking towards it. Price is coming back towards it and retesting it. So that's why this is my expectation of this, because I drew this trend line from one point of structure to another. And now I'm expecting this trend line, you can see, is a price magnet. This whole time,
Mm,
this trend line is a price magnet. So that's why I'm waiting for this trend line to get retested and price to hit this 4 hour bullish order block and daily bullish order block for me to then buy the trade. So that's how you can easily, comfortably enter into like a 1% trade or 2% trade.
all right. So yeah. Mm, yeah. So
There goes
when
gold.
when when we on the I think it was when we entered for the reversal for gold, uh, it still hadn't completed the structure. I mean, it did do from 100.
Yeah, it hadn't completed structure, but remember, structure does not always have to be. If structure was always completed 100% of the times in the market, guess
Mm,
what you would do? You would always have sideways markets because
oh yeah,
price would always be moving from resistance to support and back and forth, back and forth. You'd never have trends in the market if structure was always to be completed by every instrument. This is the price action you'd always have in the market.
yeah,
But
yeah.
but we already know that price action does not work that way. So for me, that's why I didn't draw when I expected the head and shoulder pattern to be completed. That's why I didn't draw all the way down here.
Mm, yeah.
Yeah. So you just want enough. So for me, always know that, okay, for your gold trade, what is your ideal TP and stop loss? Stick to that. Don't care whether it goes 100% above and you're like, oh my God, I could have made 100,000. How many people are going to hold on to a trade to make 100,000? So just be realistic and say, for me, I'm satisfied with having 100 pips TP on gold. For me, I'm satisfied with having 50 pips TP on gold. For others, it's 400. Stick to that. Okay. On the other hand, tell yourself, how you are on gold, what is my satisfaction for a stop loss? Is it 50? Is it 100? Is it 1,000? If that's the kind of trader you are, set that. And then if it hits that target, at the very least, start trailing or set break
Mm,
even, or yeah.
So if it does go to the 1900 area, like if it does go there and we get a signal on the 30-minute, that would be like more than 600 pips, like from the
Mhm.
highest point from where it started. Does it usually? I don't think it usually does that kind of movement. Or has it happened? Does it
Yeah,
usually do
but
that?
you really don't want to look at like what it's usually been doing, because price is
Mm.
irrational, right? Price does
Oh
not
yeah,
always have to do what it always does. All I advise you have a, Steven is probably better than this than I am. Look at the charts every day and say, okay, what are the charts telling you? So
yeah,
the only one of the way to see what charts are telling you, you have price action, you have patterns, you have trend lines. So that's why I have my trend lines. Like right now, I don't feel any itch to buy gold. I see we have an
yeah.
hourly bullish low right here, but I'm not
Mm.
itching to buy gold, because for me, what my analysis is telling me, don't even attempt to buy gold until it reaches here. That's it. So
Yeah,
don't care about, oh, gold doesn't drop 800 pips. Listen, price always comes from one area to another. That's all you need to know. So find where
mm,
is gold coming from, where is gold headed. If it's headed down, just wait for where it's headed down. If you can find an entry to take it down to where it's headed, like here I mentioned there was a 4-hour bearish low. I already
yeah,
missed that trade. So, and I did show you guys that that trade could have just hit TP right now. I already missed the sell. So why should I rush? As much as I know gold is going down, why should I rush to go ahead and buy gold? I'm sorry, and sell gold, even though I know it's going down. Because let me tell you why I'm not rushing to sell gold, even though I know it's going down.
oh yeah,
What did I just tell you about structure? Structure does not always have to be completed. Static trend lines don't always have to be retested, because if static trend lines, if structures always have to be completed, we would have a horizontal market. So gold can easily
mm. Oh yeah,
come down
last one.
here, go back here to 1920, pick up liquidity, and then
Yeah,
break out of this range. This is a channel, higher high of this higher. You see like how I just have it right here. This is a
yeah,
channel. This is a trend line by itself. So gold can come down here, and this can be the lowest gold will ever be for the next 5 years. And then gold can come up, pick up liquidity at this hourly bullish low at 1920. And then guess what? Break out of this downtrend and then
yeah.
push up. So if
Oh
that
yeah,
happens, then I just need to wait for that, because guess what I can do right now? Right now on gold, I can easily draw another trend line from this higher high, right? In case
yeah.
this trend line is not retested, and then we get a break of this trend line and then retest and close above, guess what? At that point, I'll buy gold, because I know we have an hourly bullish low here to push price up.
Mm,
Yeah. And so long as
yeah.
none of this happen, I am not trading any point in between here. Like that's it. That's nowadays what I'm doing. If none of those two scenarios happen, I'm not trading. That's it. I look US 30. I just told you guys for US 30, the only time I'm waiting to buy US 30 at around 33,775. And for those of you who are on the live session with me on Monday, I did identify this area, either Monday or no, Monday we didn't have a live session. Tuesday.
It's good, yeah.
Um, I did mention 33,755, 775. So if US 30, it doesn't have to come here, but the only time I'll buy US 30 before then is if we get a buy, we get a golden cross on the 15-minute and we get a buy signal. That's the only time I'll buy US 30. But if we don't, my best buy area is 33,775.
Mm. So especially head and shoulder pattern, I think that's the way you have to be careful of, isn't it?
You
I
say
mean,
you
of
have to
course,
be what?
careful the head and shoulder pattern.
Well, it's not about being careful. For me, it's all about like here. You see this
Mm,
trade requirement? It's all about this.
yeah,
It's not about being careful. And also, like I sent you guys this video in the morning. You see, like this video, it's not my video, and compared to other trading groups out there, I don't mind like sharing other people's channels. Like for me here, it's all about education. So if you watch this video, it talks about some of the things we talk about, like is the trade valid? Like have a certain risk percentage. This guy talks about there are people who like
yeah.
take 20 trades a month. There are people who take 10 trades a month, and how to use like your percentage risk and just to pass that challenge. So just know what kind of trader you are. How many trades do you take in a month? And then if you get a trade that's valid, go ahead and take it. Don't care about don't worry about being careful. So long as you have these 5 items that I talk about, and I sent also a video about these 5 items. So long as you have those, it's not about being careful. It's about, is the trade valid or not? Most of the times, if you find yourself questioning questioning a trade, you're still struggling with one of these things right here.
Mm.
So if you ever, like nowadays, like I'm so comfortable with letting a trade ride out for 8 hours. You know, that GJ trade, I've held it for 5 days or for 4 days. I'm so comfortable. The best thing you can do, if you're really going to question yourself, okay, ask yourself, if I hit stop loss on this trade and this trade was it was valid, I had a very good risk per trade. My risk to reward ratio was at least 1:1. I had a set TP and stop loss and I took the trade, but this trade hit stop loss. So what went wrong? So for me, I know for example, the GJ trade, next time instead of a 200 pip TP and stop loss, I will do a 150 pip TP, 150 pip stop loss. That is how you grow as a trader. So if you're still questioning on or being too careful about trading, you need to work on these 5 things. And if you do, like this guy I sent in the group, he talked about, no, you can easily lose you can easily lose an account, then move on to the next account, move on to the next account, and that's it. Yeah.
Right, yeah.
Yeah, so I'm not sure we're going to get any of this trades. So again, mark these areas on your charts. 775 area for US 30, 775 to, I would say, 700, because I do expect manipulation. So look for entries for buys on US 30 at around 775 to 750, or the other buy entry you can get on US 30 is if we do get a buy signal on the crosses indicator on the 15-minute time frame. For that one, I would be careful, a little bit careful with it too, because we can definitely get a buy on the crosses indicator, and then they manipulate price back to 775. So let me put it this way. My ideal buy on US 30 is 775 to 700 area. This buy on the crosses indicator, I would say maybe has like a 60 to 70% chance of probability, mostly because we have liquidity down here, if that makes sense. So this buy, the 775 has like a 90% probability. This other buy down there on the crosses, as much as this indicator has like a 90 to 98% win rate, based on where price is at, price is telling me that it's going to go lower to 775. So just because of that, the probability for these trades, for this one trade that we would get, would drop to about 70% for me. For gold, again, you can see gold is still dropping. The ideal buy is around 1900, 1905 area, but because 1900 is a psychological level, expect manipulation to around 1890, 1880 area, and that would also line up with the second trend line. So keep in mind, for gold, we have 3 trend lines. So for sales, we have this trend line to the downside. The first trend line to the downside here, right here, that would give us an entry around 1900, 1905. The other major trend line, which was before the one that we expect to get retested first, has an entry around 1880 area, 1890 area, which is where we do expect some manipulation. So and also for gold, do we have any order blocks down there? Unfortunately, we do not have any order blocks. So if gold breaks where we are at right now, gold is definitely going to 1900, 1880 area. So you can see we don't have any. This hourly bullish low is the last order block we have on gold. And even looking at the zones, the last demand zones for gold are around 1880, 1875 areas. So, it's just about analysis. Don't get in too early. So that's my expectation for gold. If we do break above this trend line to the upside, above 1925 area on the hourly, and we get a retest and closure above, then you can maybe find a buy on gold, because it would also align with the hourly bullish low and hourly bullish high. So that's the only time you can take a buy, which is if gold breaks above this hourly trend line. And for sales, the best buys will be 1900 to 1880 area. For EU, oh gosh, how do we miss this? Oh God. Look at, we could have easily been filled, but this is the trade I said I was waiting for on EU. Literally retested our entry to the pip and dropped straight to TP. So for this trade on EU, right, when I marked it up, I said I would wait for a retest of the hourly bearish low, and then this is the area I would enter EU. And you can see would have had no drawdown for that trade. But anyway, at least the best thing is that we know our strategies are still valid. We'll always get such a setup. So next time, so this is what to take out by this missed EU trade. You see the setup that I told you guys about? Break of the 9 EMA on the hourly. Don't chase that first break. Wait for the next hourly candle to break, to retest the 9 EMA on the hourly and close below, and then you get that entry. So this entry actually came up first. So this was the original entry was somewhere around here, maybe. I think the original entry was somewhere, because it did come up. The original entry was 1.09827. So this was the original entry for EU, somewhere around here, 9827. Yeah, so this was the original entry for EU.
It may be a sell coming up on a cross indicator for that, don't know.
For sell, I'll check it. So this was the original sell on EU, but since we missed that, when we started the live session, I did say if we retest the hourly bearish low, that would be an entry we took. We missed that, but that's fine. So you said on the crosses for EU, Livy?
Yeah, on EU.
Okay, let's see.
15
Yes.
minutes.
Yeah, we do have a sell coming in for EU on the 15 minutes. You are right. Personally, I don't take crosses on FX pairs, but since EU normally has a bunch of volatility, this is a sell I might take on EU. So yeah, this if the sell does come on EU on the 15-minute, that will be another sell. Let me see where
No,
this.
that's something you take the next 3 cells, you would just go the original since it's a pair.
So I haven't backtested that. So to be honest with you, that is very relative, because if I say the first three, look at just backtesting this, all of these cells would have hit maybe just the first one. And it looks like for EU, you might have to do 200 pips. So to be honest with you, just by looking at this, well, I know this sell is more probable right now because the last time EU tried to sell, it pushed back up. So in any case, this is a very nice sell on EU. I don't know. To be honest with you, I'll be lying to tell you to take the first 3 to 4 because I haven't backtested the crosses indicator on FX pairs. But this one right here will be probable, will be highly probable. So I don't know. I don't know about the others, but it will be highly probable. So hopefully that helps. Yeah. Yeah, so I'll be watching that as well. Let's see what areas we have for EU down there. We have a 4-hour bearish high. We have a 4-hour bearish high, 4-hour bullish high and low. So this might invalidate that we have a bearish 4-hour bearish and bullish. So these two cancel out. We have an hourly bullish high. So that leaves just an hourly. Let's see the zones we have down there. So down here, we have buy zones on EU. We don't even, so for me to even be confident about this 4-hour bearish high, I would have wanted to see a sell zone on EU right here, but I don't see any sellers down there. Yeah. So to me for this one, the hourly, and let's see the area we would get that cross. So the area we would get that cross is about 1.09445. And we do have the structure. So you see the structure to the upside, we would be taking this sell below 50% of this structure. On the other hand, we do have a structure on a bigger structure above there. So these cells have been invalid down here or would have hit stops. These cells also would have hit stops. These cells would have, in any case, I wasn't looking to take cells down here on EU. So to be honest with you, I would just take the first one. I wouldn't focus on any other cell that comes after that. Also looking at the zones, like down there for EU, we have a bunch of buyers down there. And this, as much as we have a 4-hour bearish OB, we also have a 4-hour bullish OB. So for me, those two cross out. So what I'm looking for EU right here, we have an hourly bullish high and low, and we have buyers sitting down here. So to me, EU might reverse around 1.09 area, and this cross right here. Yeah, so this cross, this sell would be a nice way to sell, because the sell would come around 1.09475. So 1.09475, and we know that EU might reverse around 1.091 area. So that would give us like 300 pips. So for me, that would be a good 200 pip sell on EU. Yeah. Yeah, so the first sell on EU on the crosses indicator, that's a nice, highly probable entry. So yeah, but after that, don't try to take the others, because the others would be around the hourly bullish zone. All right, so I went over the entries for those, and is there any last questions? If not, I will see you guys tomorrow. All right, perfect. All right, I will talk to you guys tomorrow. Trade safe. Wait for those entries to line up. Don't try and enter early. Remember, there's no need to chase anything. Once you get that one good trade and you have a nice TP and stop loss, your trade will go into TP most of the times based on our strategies. But other than that, I will talk to you guys later.